In this video, we're looking at everything you need to know about ARK Invest's ARKW ETF listed on the New York Stock Exchange. Hi everyone, and welcome to the series on exchange traded funds or ETF investing, where I look into specific ETFs and show everything you need to know about the product offering before buying shares of the fund. ETFs are personally my favourite way to passively invest, as it takes the stress and worry out of stock market investing, which can be very volatile with wild price swings holding individual stocks. We will go over the ETF Fact Sheet, including the management fee, the index the ETF tracks, dividend yield, payment frequency, and the fund's performance. I will also go over the top 10 holdings in the fund, as these typically make up the largest portion of the weightings and resulting performance of the ETF overall. It is always crucial to understand what you actually own in these ETFs before buying them. If there's any ETFs you are interested in and would like me to make a video on, write it down in the comment section below. ARKW is an ETF provided by ARK Invest, who own and operate the fund. ARK Invest are the ones who actually own the underlying shares in the individual companies. So when we buy shares in the ETF, we buy from ARK, who continually issue new shares in an open-end fund, and not the individual companies inside the ETF. ARKW aims for thematic multi-cap exposure to innovation across various sectors. ARK believes the securities held in ARKW present the best risk-reward opportunities from ARK's innovation-based themes. Now, ARK defines disruptive innovation as the introduction of technologically enabled new products or services that potentially changes the way the world works. ARKW offers exposure to the next generation internet, including artificial intelligence, big data, cloud computing, cybersecurity, and blockchain technology. Companies within the ARK Next Generation Internet ETF are focused on and expected to benefit from cloud infrastructure and enabling mobile usage, such as companies that rely on the increased use of internet-based products, new payment methods, the Internet of Things, and social media. ARKW is an actively managed ETF that seeks long-term growth of capital by investing at least 80% of its assets in domestic and foreign equity securities of companies that are relevant to the fund's investment theme of next-generation internet. ARKW doesn't track an index like passively managed ETFs, as it's an actively managed one, where the investment team at ARK buy and sell companies they believe will outperform the market returns due to their disruptive business model. The companies within the ETF can change over time, but typically there will be 35 to 50 companies held in the fund. Stick around to the end of the video, where we'll see how good the performance and returns of ARKW have been over time. ARK's ETFs are becoming some of the largest ETFs in the world, offering exposure to some of the world's most disruptive companies. ARKW has a large appeal to investors seeking to build a long-term stock portfolio, including various market cap US and international stocks that will never have to be sold. To find the ETF in your brokerage account, you will need to type in the ticker code ARKW to bring up the options to buy or sell shares in the fund. The ETF doesn't actually pay any distributions or dividends, as it continually buys and sells positions with the aim to generate capital gains instead of income. It has a management expense ratio, or MAR, of 0.79% per year, so for every $10,000 invested, it will cost $79 per year in fees, and this isn't a bill you have to pay immediately. It is automatically deducted from how much money you have invested in the ETF, so you never really notice anything being paid or taken out of your brokerage account. Now, since this ETF focuses on companies with high innovation, the sectors can range depending on what industry ARK's selected companies are based in. The highest sector allocation is within IT at 40%, followed by communication services at 29% and consumer discretionary at around 15%. If you're enjoying this style of video, feel free to give it a like to let me know and subscribe for more. Now, when purchasing shares in an ETF, I like to have a basic understanding of the top 10 holdings, as these companies will have most of my money allocated to them, and they will end up driving the bulk of the fund's performance. So we'll quickly go over which companies are in the ETF's top holdings and what they do to make money. Tesla is an American electric vehicle and clean energy company based in California. Tesla makes money selling its products including electric cars, battery energy storage from home to grid scale, solar panels, and solar roof tiles, along with related products and services. The purpose of Tesla is to help expedite the move to sustainable transport and energy, obtained through electric vehicles and solar power. Square is an American financial services and mobile payment company based in California. The company markets software and hardware payment products and has expanded into small business services. It makes money by selling devices such as the original Square Reader, which accepted credit cards on mobile devices, along with the Square Stand, which is essentially a sales terminal capable of receiving swipe and contactless payments. It also provides services such as the Cash app, which allows people to transfer money to other people via the app or website, and now also allows users to buy and sell Bitcoin. Roku is a brand of hardware digital media players. The company offers access to streaming media content from various online services. Roku devices have been considered influential on the digital media player market, helping popularize the concept of low-cost, small form factor set-top boxes for over-the-top media consumption. Roku makes money by selling their own streaming devices along with advertising. A number of ways Roku makes money through its advertising and media business is selling publishers' inventory, third-party subscriptions, audience data access for publishers, display ads, and selling ads on its own TV channel, and deals with TV manufacturers. Teladoc is a multinational telemedicine and virtual healthcare company based in the United States. Their primary services include telehealth, medical opinions, AI and analytics, and licensable platform services. In particular, Teladoc Health uses telephone and video conferencing software, as well as mobile apps to provide on-demand remote medical care. Teladoc makes money selling healthcare services via a subscription-based model, selling directly to the payers. Companies pay an annual subscription per member to be covered. In one contract, thousands and thousands of patients can be brought on board and instantly monetized. Zillow is an online platform dedicated specifically for the real estate database. It is a platform that provides individuals and businesses alike with real estate listings. The system is accessible through the Zillow website or the Zillow application on mobile devices. Zillow Group's portfolio offers all stages of the home lifecycle, which includes renting, buying, selling, and financing. Zillow allows users to list houses for free on their website and makes money by selling ads, such as property management companies advertising their listings. Zillow also allows users to pay rent online to their landlords, charging a transaction fee as another source of income, along with referral fees when a broker closes a home sale transaction with Zillow Flex. Spotify is an audio streaming and media services provider, with global headquarters in Sweden and corporate headquarters in New York City. Spotify offers digital copyright-restricted recorded music and podcasts, including more than 70 million songs from record labels and media companies. As a freemium service, basic features are free with advertisements and limited control, while additional features such as offline listening and commercial-free listening are offered via a paid subscription. Users can search for music based on artist, album, or genre, and can create, edit, and share playlists. It makes money by selling ads in its freemium service, along with a paid subscription model, which removes ads and provides additional functionality within the app. Shopify is a Canadian multinational e-commerce company headquartered in Ottawa, Ontario. It is also the name of its proprietary e-commerce platform for online stores and retail point-of-sale systems. Shopify offers online retailers a suite of services including payments, marketing, shipping, and customer engagement tools. Shopify makes money via its subscription-based offering for online stores, along with merchant solutions including payments processing transactions, shipping, referral fees, and point-of-sales hardware. Greyscale Investments is a company that manages cryptocurrency investment funds. The Greyscale Bitcoin Trust is a digital currency investment product that individual investors can buy and sell in their own brokerage accounts. Greyscale Investment calls it a traditional investment vehicle with shares titled in the investor's name. Although the trust is not an ETF itself, Greyscale says it's modeled on popular commodity investment products like the SPDR Gold Trust, a physically backed ETF. Its success mirrors that of Bitcoin because its value is derived solely from that cryptocurrency. Twitter is an American microblogging and social networking service based in California, with users posting and interacting with messages known as tweets. Registered users can post, like, and retweet, but unregistered users can only read them. Users access Twitter through its website interface or its mobile app. Twitter makes money by advertising on its site, which constitutes the vast majority of the company's revenue, along with data licensing and other services. Twilio is an American cloud communications platform as a service company based in California. Twilio allows software developers to make and receive phone calls, send and receive text messages using its web service. The company makes money by charging its clients a per-minute rate for calls, per text message, and a monthly rate for Twilio phone numbers. Twilio will automatically draw down their client's account balance as they use it. Now, ETFs are considered to be low-risk investments because they are low cost and hold a basket of stocks or other securities, increasing diversification. For most individual investors, ETFs represent an ideal type of asset which builds a diversified portfolio. Still, unique risks can arise from holding ETFs, as well as special considerations paid to taxation depending on the type of ETF. Since inception, ARKW has had a total return of 41% per annum before taxes. 2020 was a breakout year for ARK, where the innovative companies they hold massively outperformed the rest of the market, with a one-year return of over 150%. Now, of course, past performance is no guarantee of future performance, but it's always a good sign of consistently improving business fundamentals, continually driving each individual stock higher within the ETF. I prefer to look at the cumulative returns, as it includes the dividends paid to shareholders, which should always be included as we're getting some value back, plus with the dividends reinvested, this is what provides the compounding effect, exponentially increasing our returns the longer we have our money invested in the fund. This is the sort of approach I take investing for the very long term using ETFs, and one day live off the investment portfolio as passive income through either dividends or selling down small parts of the position, but maintaining the bulk of the capital. If you want to see how these companies make money in detail, watch the playlist shown in the end screen. Let me know in the comments what you think of this ETF and whether you currently own any shares or plan to buy. If you enjoyed the video, leave a like and subscribe to the channel for more investing and Tesla videos. Thank you for watching, and I'll see you in the next one.